goldsilver.com. Price match guarantee. Free shipping. Global storage options. Phenomenal customer service. Get the best-selling book, Guide to Investing in Gold and Silver, for free at goldsilver.com. Hi, this is Mike Maloney, and I want to welcome everybody back to this series of special reports with Ronnie Stoefferle of Incrementum AG and the In Gold We Trust report. This section is the final section in his chart book, and at the beginning of it, there's a quote that says, "The record of fiat currencies through history, 100%, is eventual failure. The record of gold for 5,000 years, 100%, is lack of failure." And that is the reason that I'm in the precious metals sector. How about you, Ronnie?
Yeah, well, I mean, I've read your books. I've read Monetary History, and being from Austria, of course, everybody here in the German-speaking world, due to our hyperinflations, has got a strong affinity for gold. And therefore, yeah, I mean, a friend of mine just said, the job of a central banker is to print, and business is doing very, very well lately. So if you want to hedge against that printing, I think you should have at least some gold.
Well, I think there's going to be another crisis coming one day or another, because there always have been crises throughout history. And the next economic crises, with them already down, they've only got, there's two tools: interest rates, and then after that, they have to resort to printing. Well, they can't lower interest rates much more than they already are. I was just looking at the interest rates in the euro area, and that's pretty much down to zero right now. Interbank lending, their version of the Fed funds rate, is down at 0.25%. So there's really no headroom to control the next financial crisis, with the exception of printing. And printing causes precious metals to soar. And so with that, I want to skip down to page 51. We're on the final section of your report. You have a chart of the bull market of precious metals in the 70s, and then you've overlaid the precious metals bull market of the 2000s on top of it. And, is there an echo in here? This thing looks like an echo, doesn't it? I mean, it's history repeating. I'm fond of saying there's a misquote. People often say that Mark Twain said that history doesn't repeat, but it rhymes really well. There's no evidence that he actually said that. But I'm very fond of saying history always repeats, but with little twists. And you can see the little twist here is that this is a bigger bull market than the precious metals bull market of the 70s, but it's also stretched out a little bit longer in time. Any comments on this history repeating itself chart?
Yeah, well, I mean, in the 70s, we have seen this mid-cycle correction where gold was down 50% from $200 down to $100. And I've read some newspapers from 1976 when they said, gold, that's over. The economy is doing much better. The dollar is getting stronger. Right. Inflation is under control. Yeah, it rhymes quite a lot.
And then the stock market crashed by 50% in 1974. Gold fell from, it was just a breath away from 200, and it fell all the way to 103, and it took 20 months to do that and then rebounded. So it was several years between gold's peak and then when it exceeded its previous peak. And we're basically in the modern day version of that trough. We haven't exceeded the previous peak yet, but there's, if you look at these two charts here and they're overlaid, you can see that there's some real fireworks coming someday soon in the precious metals sector.
And Mike, one thing that I want to emphasize, if you analyze the end of the last big bull market in the 1980s, beginning of 1980, when Paul Volcker stepped in and he tried everything to kill inflation, and interest rates were, I think, up to 20%. Now, it's the complete opposite. Central bankers are trying to do everything to create inflation. And from my point of view, be careful what you wish for. It might come true, but they won't be able to control it. So right. I think this is, if you compare it to this previous big bull market, there are similarities, but we're far away from the top.
Yeah, people don't understand that inflation isn't necessarily directly connected to how much currency they're creating. It's connected to that times velocity. And the minute that people don't trust the currency, the minute they feel uncomfortable with it, velocity can pick up. Velocity means that, if people start making a lot of transactions, and if they're trying to get rid of their currency and buy stuff that's real, velocity picks up, prices go up. That's one of the things that happened in Weimar Germany. You were talking about, as an Austrian, people that speak German are very familiar with what inflation can do. And I think that these central bankers really don't know what they're doing. They're taking a wild guess at this stuff, and they're playing with dynamite. I mean, it's just so dangerous, the things that they're doing. And we're in all of this uncharted territory. Negative interest rates. I was just looking at the currency supply growth of the euro area, and up until they were still printing all the way up until last year. So why is there still an emergency going on if we're in such a great economic expansion? Why is the Federal Reserve in the United States lowering interest rates again? That just shows me that they're still worried about something, and they're saying the economy is strong, but this whole thing is an illusion. It was bought and paid for through currency creation. It's a fake recovery, and that's dangerous. I want to skip down to page 53. You've got commodities versus stocks at the lowest valuation. So this is all commodities, not just precious metals, but all commodities compared to the S&P 500. And it's just showing that right now, even though gold and silver have done this pullback since 2011, they bottomed in 2015, and they're on the way back up now. But commodities in general are suppressed, and this is something that happens when inflation breaks out, the commodities take off. This chart begins in 71, and you look at what happened from 71 to 73, 74, and then the rebound again to the peak in 1980, 81, when gold and silver peaked, and they peaked in January of 1980. So this is a good predictor of whether the metals are undervalued compared to everything else, where, as people just get into this euphoric high of speculation and they're all charmed by the stock market, but the stock market eventually reverses. And this is just sort of confirming that the whole commodities sector is suppressed, and it's at the lowest valuation that it's ever been since 1971. And then the next chart, you've got the commodities index divided by the Dow Jones Industrial Average, and it's showing the same, pretty much the same thing, that it's incredibly undervalued, and the reversion back to the mean. And if commodities rise, gold and silver rise with them. So have you got any comments on those last two charts that just prove that the stock markets are overvalued and commodities, precious metals along with them, are undervalued?
Mike, I have to say, I love those charts because they're so powerful, because they show you that financial assets are extremely overvalued versus real assets. And normally, as we talked about already, markets tend to mean revert. And we should not forget that the bottoms in those charts, so stocks being extremely expensive versus commodities, also means it goes along with tops in the US dollar. So a weak US dollar should be a great environment for commodities and precious metals. And I think we're on the verge of that. So if you expect a positive environment for precious metals, for commodities, then of course it also means a weaker US dollar. And this is actually what Donald Trump is very eager to achieve. So if you don't have any allocation in this space, in the precious metals or commodity space, I think from a long-term perspective, as you can see on those charts, it's a great buying opportunity.
Yeah, the second chart here of the commodities divided by the Dow Jones, this goes all the way back to the year 1900. And so you've got a mean in this chart, and the commodities have not been this undervalued since the 60s. And the stock market had been rising from the Great Depression until 1966, when the Dow Jones hit its head on 1,000 points. And that is the very bottom of this chart. And we're down very close to that right now. And then the stock market moved sideways and just kept on. The Dow hit its head on 1,000 points for the next 14 or 16 years. It was 1982 when it finally broke through the 1,000 point barrier and began the greatest bull market in stocks in history, 1982 to the year 2000. But during the 60s, it was just incredibly undervalued. The commodities were compared to the stocks. And then the stocks, in that period where the stock market went sideways, commodities rose tremendously against the stock market. It looks like they went up about 16 times compared to the stock market here in this chart. So it's an amazing opportunity. It just proves, again, that the precious metals sector is incredibly undervalued. The next chart on page 55 shows a huge divergence between the stock market and commodities right now, and that this mean reversion that you're talking about, there's something big coming where stocks need to go down, commodities need to come up to go back to these historical averages. And you can see that there were periods of time throughout history where these opportunities exist, that the spread between the data line that represents the stock market and the line that represents commodities. Anyway, I want to thank you so much. These charts have been absolutely fascinating. I want to remind everybody out there that Jeff Clark is going to be doing a special presentation on mining stocks and mentioning some individual mining stocks. The link will be down below this video. And please visit Ronnie's website. Share this video, like it if you can, help us out. Subscribe to our channel. That always helps the YouTube results. If you've got anything from these videos, just help spread the word. We'll see you next time. Thanks for listening.
GoldSilver.com. Price match guarantee. Free shipping. Global storage options. Phenomenal customer service. Get the best-selling book, Guide to Investing in Gold and Silver, for free at GoldSilver.com.